Welcome back to another episode at Dennis Bank Trades. I hope you enjoyed the last video where we talked about the basics of the market, and now I feel like at this point you're well versed with that. And today we are going to talk about the Forex brokers because these are very important. So before you actually go into the business, you need to actually work with a good broker. So today we are going to basically talk about how to choose a Forex broker. Well, we'll talk about the regulated brokers, the ones that are not regulated, what to look for, what red flags are you likely to see that will indicate that maybe this is not a good broker for you. So this is Forex Foundation series. This is part 2 out of 20, and if you're on this part, your journey is coming closer. Your journey is going to end more. So if you're on video 2 out of 20, you're actually on the right path. So what we are going to cover today, we're going to talk about what is a Forex broker, as many people might not know. What is a Forex broker? We are going to look into details. Who is this broker? The types of brokers explained, whereby we are going to see the different types that exist in this Forex market. Then we're going to talk about the regulated versus the unregulated brokers. Then we're going to talk about the key features to compare of each different broker, the red flags, whereby if you see these signals, you're just bound to walk away. And then also how to open a demo account. So why are we covering the brokers first? Because many brokers that are not regulated, they can easily run away with your money. That is why this video is important. We are looking at the way you can keep your money safe, because that's the first rule of the game. So what is a Forex broker? A Forex broker is a company that provides retail traders with access to a trading platform, acting as the intermediary between you and the interbank currency market. Yeah, so you have your money, there is a market, then there is a broker. Why does the broker actually come in? Because in the real life market conditions, a person is supposed to trade with a minimum of $100,000. So most of us, or most people, don't have $100,000 to trade with. So now the broker comes in with an opportunity whereby with your $100, he can leverage that amount of money and help you participate in the real market. So that is why the broker is there, for context. So he acts as the bridge whereby he's connecting orders to global currency liquidity providers and banks. And also he gives you a platform where you can trade. Yeah, so he gives you a customized platform whereby you can actually place your trades, whether longs or shorts, to participate in the market with ease. So a Forex broker also acts as the regulator, whereby he enforces margin rules, leverage limits, and also protects your deposit, whereby let's say someone goes in with a lot of money on one position. In cases whereby the market is going against you, this broker can actually put a margin call, and you can remain with some money on your account. Otherwise, without a broker doing something like that, you can actually lose all your money. So the types of Forex brokers. So understanding this model tells you how the broker actually makes money, and it's really important as you're understanding the business. So we have the market maker. These are also called the dealing desks. So the pros, they'll give you fixed spreads, at predictable costs. So these fixed spreads will help you out in the market not to have a lot of slippages. So it also trades in low liquidity. Yeah. Um, to explain this, there are cases whereby the liquidity is low, especially in those sessions like Asia. So with a dealing desk broker, you can actually trade in those sessions that have low volume and actually make some money out of it. Then the cons, there's potential conflict of interest, whereby if you're making money, there's a potential conflict of interest, whereby if you're making money, it's not good for them because they are taking trades on the opposite direction as you. You get? So if you're making money, it's not good. So understanding the type of broker you're operating with is actually key. So the broker takes the other side of your trade, whereby if you're buying, for them they are selling. So it becomes a competition. Then we have the ECN, which is the electronic communication network type of brokers. So the pros or the advantage is that they give you raw spreads from the real market. So actually with this ECN broker, you can actually tap into the real market and have the real spreads from there, in that your trades will be smooth. So there is no dealing desk, whereby there's full transparency of whatever is going on. Then for the disadvantages, there's a commission per trade. Let's say if you're risking $100 and you open a position, that means that a commission of like $5 can be charged. That means that your expenses are increasing on this ECN. And also the spreads widen in news events. Remember, news events usually happen in the New York session where the volume is very high, and since many people are trading and all that, it is most likely that the spreads are high. So news is an uncontrollable event in the market, so the spreads are usually high on these brokers. So you have the STP, straight through processing broker. So one of the pros is that the order is sent directly to the liquidity, whereby these people are actually sending your order to the liquidity. There's no broker interference. You get? So you place a trade, they put it direct to the market. For the disadvantages, slightly wider spreads than ECN. So their spreads are wider, meaning you will easily get stopped out more when you're trading on STP compared to ECN. So execution varies by providers, whereby different providers have different executions. So now this part is important, and it's talking about the regulated versus the unregulated brokers. So this single decision can actually save you an entire account. Think about it. So a regulated broker, I'll read out some of the characteristics. It's licensed by the FCA, SCIC, CYSEC, or equivalent. So it's licensed. Someone will scrutinize what they are doing and actually give it a license. So client funds are held in segregated accounts safely. So the negative balance protection is offered required. Let's say the trades are going against you. You can't lose all your money on the account. There are some protections that come in. Then it is subject to regular audits and reporting. So actually, the broker will be audited to see if it's not actually cheating their clients. So they are bound to do you right. Then there's dispute resolution mechanism. Let's say you have a dispute or a misunderstanding, you can actually reach out and talk it out, There's that provision. There's a maximum leverage caps enforced by law. So you realize that on some funny outshore brokers, one can have a leverage of 1 to unlimited, whereby they can even, let's say you're trading with $1,000, and with 1 to unlimited, you can even open a position that you can risk almost twice your account. That means that if they move against you halfway your stop loss, you're already out. So in a regulated broker, there are leverage rules whereby you're not supposed to over risk. They are protecting you as a client. So for an unregulated broker, and this is the broker you have to avoid. So it has no license. They're usually operating from offshore accounts or offshore havens, whereby even if they rug pull you, you can't even file a lawsuit. Your funds are mixed with company funds, in that it is the whole entity. It is a single entity, your funds and the company funds. In the event that the company dies out, it dies with your funds. So there's no protection if the broker disappears. As I said, they can easily disappear with your funds. There is no trail audit. They're not audited by anyone. So they can actually manipulate the pricing and take you out, and you lose money. So there is no legal cost if you lose funds. As I say, they're operating from offshore havens, meaning in such offshore islands, there are no regulations. So it may offer 1 to 2,000 leverage to lure beginners, and these beginners, they are more bound to lose money. And this is a good thing that you are actually taking this course. You're on video 2 out of 20 to actually understand the business before you actually even invest in your money. Yeah, it's completely free, and the only thing you can do is actually subscribe, like, share to your friends. So the rule number 1, only trade with brokers regulated by a tier 1 authority, and that's it. So the trusted regulated bodies. So you have to look for this license before you deposit a single dollar into this broker. So you have the FCA, which is the Financial Conduct Authority, and it is based in the United Kingdom. We have the ACIC, which is the Australian Securities and Investments. It's based in Australia. We have the CYSEC, Cyprus Security Commissions. It's a tier 1. It's based in Cyprus. We have the CFTC. So it's also a tier 1, which stands for Commodity Futures Trading. It's based in the United States. We have the FSC, Financial Services Commission, which is a tier 2 found in Mauritius. So we have the Vanuatu Financial Services, and this is offshore. This is one you should avoid at all costs. So always verify a broker's license number directly on the regulator's official website and not from the broker's own page, because they can actually manipulate all this. So which are the key features that you would like to compare? So you have to use this checklist before opening a live account or a demo, anything, just to work with that broker. So spreads and commissions, they have to be tight, especially on Euro USD. So you have to compare. So let's say on one broker has spreads of 5 and the other one has spreads of 2. So the one with lower spreads would actually be the better broker in terms of spreads and commission. So you have to check for deposit protection, whereby are these funds really segregated, whereby you find out that some brokers mix the company funds with your funds. In case of the broker facing challenges, your money can actually be consumed as a company asset. So the deposit and withdrawals, you have to look at the ease with which you can actually withdraw your money. Yeah, are the withdrawals fast? Are they reliable? Are the payments acceptable in your country? Yeah, you have to look into all that. The execution speed, whereby are there slippages? Are you placed in at the prices you want to buy at? So you have to look at the platform quality. Are they operating with MT4? Are they operating with MT5? Are they operating with C Trader? Yeah, you have to look into all this. All of these will work hand in hand for your progress in trading. So do they have some education and support? So good brokers invest in their traders' success, whereby they'll make webinars, they'll make live meetings, they'll expose the people trading on their brokers with the actual people that are profitable, and share a session or two, So does your broker really want you to win? That is a good broker to deal with. So these are the red flags that you have to walk from immediately. So if you see that they are telling you, they are giving you guaranteed profits, run away. If there is no regulation, information listed, if they are not regulated, meaning they can actually manipulate your price, they can actually steal your money. So that is a no-go zone. So if the withdrawal requests are blocked or delayed, so your money should enter the brokerage easily and also leave the brokerage easily. So if they are playing games around, that means that they might actually be a shady broker. So if there is pressure to deposit more, actually, like in this whole trading business, it's about calmness. So if you see any speed and form of pressure to lure you into actually depositing more, they are giving bonuses. They are telling you that if you lose, they'll rebate back some of your money. Those are all signs of a shady broker. Don't deal with them. So if they offer larger leverage, whereby it is more than 1 to 500, you have to run away, because they want you to risk a lot than you have in your account. They want to over leverage your money such that you can lose easily, whereby some even give 1 to unlimited leverage. So you can imagine the exposure to risks. So trust your gut. If something feels off, something is probably wrong. So now we are looking at how to open a demo account. Yeah, so as someone who is starting, I would urge that you start by using a demo account. So you trade it for some good time, and if you're seeing that now your strategy is kind of working, you have the hang of it, that's when you can go to a live account. And by following this series, you would actually get the strategy, get the psychology, you would have it all here. So just stay locked in, subscribe, turn on the notification bells. Let's go through this journey. So how to open a demo account? So you visit the broker website, whereby it has to be regulated, such as Paperstone or Wanda, and I'll be having some links in my profile for some of these. Then you click open demo. It's usually found in the top navigation bar of the site. You have to fill in the basics so that they get to know their clients, so the name, email, country, and also for this you don't have to use your national ID or driver's license. Yeah, so it's just completely free. So you have to choose a platform, whether you're trading with MT4 or MT5, but personally I would recommend MT5 since it has some new features. Yeah, it's cool to actually deal with. So you have to actually log in and explore. So if you choose your virtual funds from, let's say, $10,000 to $100,000, but I would add that you use a figure of capital that you can actually get as live funds, so that you get a realistic feel, you get used to the emotions. Because let's say you have a demo account of 100,000, whereby you can actually risk $10,000. So the way it fluctuates, it won't be the same. Let's say you're trading on $100 account that you can manage. So the better thing would actually starting right off from the part with $100 demo. You learn how to navigate, and then you actually deposit that $100. So if you can do that for $1,000, $10,000, yeah, you can actually just use a figure that you're comfortable with. So the demo tips, you have to trade it as if it's real money, because here emotions matter. Run it at least 4 weeks before going live. Yeah, 4 weeks, you have to see that you're actually getting the hang of the game, you know the rules, you know how to make your profits and all that. So you have to test your broker's execution speed and spreads. So when you actually enter, are your positions filled in right away? How are the spreads? Are they against you? Are they favoring you? Something like that. So you have to practice risk management rules, whereby some people, when they know they are on a demo, they usually just spam positions. That is not good. You have to practice professionally. So you have to track every trade in a journal. This is a business, and every trading day you need to learn from it. Yeah, so this is a recap of what we actually learned today, that brokers are the bridge between you and the Forex market. We have ECN, STP brokers, and they have different models. So regulation is not negotiable. Always verify the license. So the FCA, ASIC, CYSEC, these are the tier 1 trusted regulators. You have to compare spreads, execution platforms, withdrawals, and you have to spot red flags before you actually deposit a single cent or start on a demo account. So yeah, this is all for today. We have been looking at what brokers are, which are the safe ones and all that. And for our video 3, we'll be looking at the Forex terminology. I know at this point you've been hearing about some Forex terms, and yeah, we'll be looking at it, whereby there are pips. What are these pips? How to count them? What are these lot sizes, whereby you have micro, macro, we have the standard lots. What is this leverage that we've been talking about, the margin calls, and all that. Yeah, so if this video has been helpful for you, you have to like, subscribe, comment, and maybe share to a friend. Yeah, here at Dennis Bank Trades, we'll have videos weekly, so you have to stay tuned in.